Blockchain, what is it and how is it going to affect the real estate industry in years to come? Right after this on Real Estate Divas. Hello and welcome to Real Estate Divas. I am Kristen Gerst with Capricorn Mortgage Investments, here with my fabulous co-host, J. Lee Thompson of
Real Estate Reformation and Texel. And our special guest today is Lee Bratcher. Lee is going to tell us all about blockchain. He is president of the Texas Blockchain Council, and we are so excited to have you here today.
Jaylee, thanks for having me. I'm excited to talk blockchain and real estate. It's a great topic.
Yeah, I know nothing, so I'm going to be the platform idiot on this one.
Hey, it's
I am
okay.
not an expert on this one.
You know what? I think there's a lot of people out there who have no clue what any of this is. I know just enough to be dangerous. They hear blockchain, all they think is, oh, cryptocurrency, Bitcoin. But what exactly is blockchain?
Great question. I love starting at the foundation. So let's think about blockchain as the next iteration of double entry accounting. And so some people are like, well, what's double entry accounting? Double entry accounting developed 500 years ago by Luca Pacioli during the Renaissance. It's how you transacted value over space and time without having to be in the physical presence of someone or trusting someone. You had a broker or a bank in the middle that was, conducting those transactions on a ledger with debits and credits. We've used that system for 500 years. Blockchain is just the next level of a ledger. It's the next iteration of one of those ledgers, where you have a distributed system of computers called nodes that are tracking the value of everybody's accounts on a distributed digital ledger. So distributed digital ledger. That's the best way to think about blockchain.
Distributed digital ledger.
All right, so
I'm like,
and right there, that's going to open up a bunch of questions. There are things called smart ledgers when referring to blockchain. Can you explain the smart ledger?
Yes. So I think smart contracts is probably what you're referring to. So those are self-executing contracts that are code-based. They're programmed in with cryptography and some clever code that allows you to create not necessarily like a legally enforceable document, but something that executes if this, then this. So for example...
Oh my gosh, so you were talking about like going back to the days of like Fortran when we had the if-then loops and...
Hopefully a little more sophisticated than that, but I'll give you a really digestible example. So we're betting on the Super Bowl. Mm-hmm. For some reason, you guys don't think the Cowboys are going to win the Super Bowl. I don't know why. And I do, and so we make that bet. And what we do, rather than us having to gather back together after the Super Bowl and, you guys... feeling
you
bad. And no, I was going to say, yeah. So what we do is we put that on a smart contract, and we have an oracle that will, look and see at the data whenever the next day comes out, and ESPN.
And go, we won.
And you guys, so we'll use the example where y'all win. ESPN posts this article. The oracle, without any human involvement, neither you guys or me are making this happen. The oracle will execute the smart contract. They will look at the ESPN article, and they will award you the money from my account. I can't do anything to stop it. So it's a way to bring certainty to these kinds of and now it's
so
sort
there's
of a
no
betting.
Backing out of a bet.
Correct.
Basically, you're
but
committed.
imagine that for all sorts of non-betting related things in business-to-business transactions. Everything that we spend so much money on trust building institutions with attorneys fees and banking fees and all
these
of
people having to oversee and making sure that everybody's doing what they're supposed to be doing.
Not to mention wire fraud. And you send a wire and almost every title company has a disclaimer. Verify this with us, call us, make sure that these numbers are correct before you send your wire.
Yep.
Because there's constant wire fraud.
Yep. That's exactly right.
Wow. So this all started, so when did blockchain like that actually start?
Yeah, that was invented with the invention of Bitcoin. With that white paper was published in late 2008 by a pseudonymous author named Satoshi Nakamoto. We still don't know who that person is.
I saw that. That is so
Isn't that
wacky.
crazy? Yeah.
That is crazy.
And they're a billionaire. They have billions of dollars worth of Bitcoin. Of course, back in 2008, it was worth zero.
Yes.
He couldn't hardly pay people to take his Bitcoin. But over time, the ecosystem has evolved, and the price is solely based on supply and demand. So the price of Bitcoin is only what other people perceive it to be and what they'll pay for it. And people think that's crazy until they think about the dollar in our pocket or the dollar in our bank account, which we all know that the money supply, the actual physical money supply, is a small fraction of the total money in circulation. That's just zeros and ones on banks, bank ledgers, and on the Fedwire clearinghouse, right? So most people don't know that if we all went to the ATM and started to try to withdraw,
Every dollar that we had.
Yeah.
we would be far short on this. So those dollars in our wallet are just a figment of our imagination too. It's only worth what you and I
You think it is.
And that inflation is also like that as well. So inflation is just the perception that prices will go up. So you buy things now, and it's a self-fulfilling prophecy. If people think inflation's coming, then inflation will come because people buy more, and there's too many dollars chasing too few goods and services.
Wow. I've never thought of it that way. That's interesting as far as like the self-fulfilling prophecy.
Yeah.
It's amazing how much that kind of bleeds into so much that we do in general. But that's so, as far as blockchain goes, I know it's going to revolutionize like so many different industries, but obviously we talk about real estate most often. So where do you see, you did study the blockchain and the effects on and recording of, what was it, land?
Yeah, land registries.
Land
That's
registries,
right.
yeah.
Yeah, Jaylee, I was a college professor before I became the president of the Texas Blockchain Council. I founded and started the Blockchain Council as a way to help the community organize with political communication, with policy, researching legislation, those kinds of things when I was a political science professor at DBU. And I researched blockchain for land registries. How do you create more efficiency in land transactions, lower the transaction costs, and also give people who don't have title, free and clear title, an ability to prove that they have the asset that they have so they can use it as collateral for maybe a small business loan or something.
So,
Interesting.
Right, and so talking about real estate tokenization, recently there was a resort out in Aspen that raised $18 million by blockchain, basically using blockchain for real estate tokenization. In essence, taking that real estate asset or that project that they were doing and easily chopping it into shares.
Exactly right.
And selling it. So are we going to see that use of it where it's like a fundraising, or, in an IPO, initial public offering for something?
I think it's coming to the stock market one day, but it's here right now in real estate, right? You're getting fundraising. Fundraising is becoming more efficient. The capital costs are being driven down by technology like blockchain. So in the Aspen example, they're able to tokenize this property and say there's 1,000 tokens that represent ownership into this property. Well, you could do that before with the general partner, limited partner structure, where you have a group of investors that are acquiring a high-end property like that. But what makes this so different is every time you want to trade out an LP in that structure, you have some friction, right? You have some legal fees and costs, and you have to do...
And a piece of paper.
And a piece of paper.
And you have 1,000 sections or tranches, tokens in blockchain. But if you have 1,000 sections and every time you bring somebody else and sell that section, that's a new piece of paper belonging to a different investor.
Yep, and high transaction costs. So you don't see a lot of people moving in and out of, there's not a lot of liquidity in those deals. Mm-hmm. But with blockchain, there's just instant liquidity. I can buy a token from you for whatever, if the example is, if I'm buying 10 tokens from you, I'm buying 1% of that Aspen resort. If I'm buying 100 tokens from you, I'm buying 10%. And if I'm buying 1,000 tokens from you, I'm buying the entire property.
Yeah.
So imagine the level of granularity and liquidity that's provided to those investors. It's unheard of.
That is.
Well, and it also goes to the resort owners, the people doing the project, because in that St. Regis example, I mean, they had to have saved a ton on fees.
I would imagine so.
I mean, even 1% on 18 million is, I mean, that's a ton. It's,
Yeah.
$180,000 and
So I was going to ask you, whenever prior to the show, you had mentioned tokenization of real estate. So that pretty much explains it, that you're able to, it makes it so much more liquid. Is there, like, I guess you can apply that to just about everything in the real estate industry, and then we're talking about even, just about every industry where there's an investment required.
Yeah, there's a great company in Austin called Vertalo that does blockchain-based capitalization table management. So their cap tables are put on a blockchain, and they manage who owns shares in private enterprises. Obviously, that's done differently in the public markets, right? It's done in a much more regulated fashion. But some private companies are still, the cap tables are still managed on like Excel spreadsheets. And so you're really having to trust that that company is keeping an accurate tab on their cap table. But with a blockchain-based cap table, you could take this liquidity idea from real estate to any other
Business opportunity.
Where it's a private private equity or venture or what have you. So.
And let's say that I bought a token. How liquid is that token? Can I easily transfer that token to somebody else?
So it depends on the industry. And real estate's going to be pretty liquid because there's a ton of real estate investors. And so if you can get in a marketplace where there's a market maker that finds, there's buyers and sellers for that token, that price is going to be pretty consistent to the actual value that would be ascribed to it in a normal marketplace, like in the normal traditional real estate market.
Okay.
If there's not a lot of actors, you might have to price it slightly lower because you're trying to entice a counterparty. But as this tokenization grows, the price gap there is just going to shrink and shrink and shrink until it's non-existent.
Wow. So there are companies right now, like you said, that are on the ground and kind of moving to build really the structure. You were saying we have the blockchain. There was all that hype, and then now we've got people that are building what will become the models for everybody else once they get on board. Because I can only imagine that this is kind of going to revolutionize everything, and so that.
Well, and taking it down to a smaller level that, most real estate investors could understand, when you're talking about smart ledgers, smart contracts, like what you were before, and how it would trigger it, could something like that be applied to, say, a lease? So that your contracts would say, like, every month, money would then be transferred from,
this account.
This account to that account.
You could even provide that person with like a 2% or 5% discount if they sign your lease with opt into a smart contract. And if they have a wallet that's attached to that where you're actually able to see there's enough Bitcoin or Ethereum or even a stable coin like USDC, which is pegged 1-to-1 to a US dollar, so you know the exact amount of what it is worth in that digital wallet. So you have certainty that every month that those funds are going to come out. And if you see that money moves out of that wallet, you could have something in the smart contract that says there's a 30-day, you're in your warning period, this is a penalty. So imagine the clarity that provides to you guys and your colleagues who are managing properties.
As long as Bitcoin doesn't lose 50% of value.
Well, even if it does, you just charge whatever Bitcoin is worth at that time.
That's correct.
You just double the number of Bitcoin that it costs because you're just charging a dollar amount based in US dollars.
Absolutely, and I understand that, but you're requiring them to have a certain threshold, right? If they are required to have $1 million in Bitcoin in this smart wallet and all of a sudden overnight it's now 500,000, that's a problem.
It could be, or you could have them do a stable coin, like a USDC, which is pegged 1-to-1 to the dollar. So whatever, the dollar changes about 3%, 4 or 5% a year in inflation, so you know exactly what the dollar's going to be worth next year to almost
a certain degree.
Yeah, to a certain degree. So you could do something like that if you were worried about price volatility in Bitcoin.
So as far as real estate's concerned, where do you see, because the more I read about it, the more it really talks about how you're going to end up, all the middlemen. It's just putting the beginning and the end together, cutting out everything in between, and that's retail, that's real estate, that's really taking out all of these people where those fees start to rack up. What do you see that is probably the first things to go in real estate, or the first positions or jobs that will be eliminated immediately?
You know, I think anytime we have technological disruption, there are jobs that are eliminated, but there's new jobs that are
created. Absolutely, I agree with that.
You know, when we didn't even know what like an e-commerce sales engineer was 20 years ago.
Yes.
The internet brought so many new jobs. So there's going to be new jobs created. We're not exactly sure what those are. It could be real estate, smart contract developers. Or it could be all these different, things that we can't even think about right now. So what I would say is the industry that has probably the most to lose is the title industry. Now, when I say that, the title industry has been hearing this for years.
Yeah.
And I don't think that in 2 years, the title industry is going away.
No.
I don't think in 10 years, the title industry is going away. And this is why. There's going to be a lot of title companies that adopt blockchain. They're able to do what they do for a lower operational cost, and they're able to lower. So I do think in Texas that we may see the title industry deregulated in the next 10 years. That's kind of controversial. I'll probably get some calls about that later. we work.
Call him.
Yeah. We work with the Texas legislature very closely on blockchain legislation, and we got 2 bills that we helped to research that Senator Paxton and Representative Parker from the DFW area, both of them, they passed those bills this session. One was to study blockchain, and the other was to establish Uniform Commercial Code regulations around what is virtual currency, what are digital assets, how can you perfect a security interest in like a Bitcoin if you're using it for collateral in a lending arrangement. So very legalese type stuff that we probably don't want to go into. But so I do say the title industry is under the most pressure. But I think those innovative title industries that really, grab the bull by the horns will actually gain market share.
Well, when you embrace the change.
They'll have to. Yeah, if you're the first one.
Yeah, you don't want to be Blockbuster and say no, I'm not making any changes. We're doing fine. When you embrace the change, it seems to work out.
But this is also something that I see affecting the commercial real estate industry sooner than the the residential market, just from the whole nature of it. I mean,
tokenizing, is that what it would be?
Right,
okay.
Right.
I'm like, I don't know, I'm learning words here. But tokenizing property, I mean, that right there, that's every commercial investor's dream, I would think, just to be able to make that somewhat liquid.
I can tell you right now that just, when I fractionalize mortgage notes, and I take on, and I've got on a couple of mortgage notes like 10 investors. One is even worse. It's like fractionalized of somebody else's fractionalization. I mean, something like I got to be honest. Something like something like blockchain would be a godsend.
Yeah.
Not to mention just the liquidity nature of it, because you've got to set up a deal like that. It takes me hours, if not days, to get everything put together. But then if somebody wants to buy a piece of that out from somebody else, there's a lot of other documents that have to be created and recorded and costs to go into that. So it's not just a free thing.
A quick, easy thing. Mm-hmm. Crazy.
So in your opinion, and this is opinion, do you feel that the real estate industry is going to be dragged kicking and screaming to this? Or I understand that, especially in the commercial era, but I know some good old boy investors, down in East Texas, West Texas.
Yeah.
Who, they still don't understand that you can't do a contract for deed. they're going to look at this
Well, we
and
have
go, no
people
way.
that still can't log on and do an e-signature. You know, I mean, that there is that pushback. I think it's getting less and less.
I got fax documents.
Faxed.
Faxed. I like had to sign up for an e-fax. I'm like, who has this anymore?
Exactly.
I had somebody else who didn't have the ability to scan or email because they just don't have that.
Yes.
So they FedExed everything to me. I
Wow.
was like hard copy.
Yeah.
And I don't do anything with hard copy anymore.
Right.
Well, they're losing out on the, there's some operational costs that they're incurring because of their lack of willingness to learn new technology.
Yeah.
So I think, the transformation in this industry is up to you guys. It'll happen at the speed at which the real estate industry allows it to happen. If there are enough, agents and brokers and bankers that see what's coming and start to take advantage of it, and they start to increase their profit margins, or they're able to, provide more, their shareholders are going to be happy, and then everybody around them may choose to adopt it as well. So it's really the speed of adoption is up to the industry itself. And I think the financial services industry has been a little bit quicker to adopt it because they're a little bit more in tune with, well, I hate to say it this way, but they've just had to use technology more. Like, people in the real estate industry can still do things
paper.
with paper. The whole process can still be done with pen and paper. And, that's probably okay because some people want to transact property that way. Property is the oldest form of wealth, right? Going back millennia. So I'm not opposed to people with that mindset. They just have to know that there's going to be a premium that they're going to have to pay for their lack of willingness to be involved in technology.
Well, and as far as people that are in the real estate world, investors and that sort of thing, and they're hearing about blockchain, besides Bitcoin or any cryptocurrency, because I think that's where a lot of the hype, where you immediately hear blockchain, you hear crypto coin. Well, besides the crypto coin industry or realm, I don't even know what to call it, but besides that, where would you say if somebody wanted to invest in blockchain or somehow get more knowledge or just figure out how they could use it in order to make their investments more valuable, what would you suggest?
So there's a couple different ways, and I'll put them in two buckets. One is the educational bucket, and one is the investment exposure bucket. So in the educational bucket, we're a nonprofit industry association. We actually have a real estate committee of real estate professionals that are learning, that are teaching, that are, they're on our Slack channel. They're like, hey, I just did a real estate transaction with Bitcoin down in Austin today or something. So they're on the bleeding edge of educating title companies and the banks and even customers and consumers who are buying and selling. That's residential, but for commercial as well. We've got companies that are tokenizing commercial properties as part of our industry association. So, find a community that knows about the technology and just educate yourself. That's not you guys specifically. You guys are already doing that, more so to your listeners out there. And the other piece is the exposure, the investment exposure piece. So if you don't want to buy Bitcoin or Ether, or which is ETH, or hundreds of other coins that are out there, then you can gain exposure to crypto by investing in publicly traded companies that have those assets on their balance sheets. You could gain exposure to blockchain for real estate firms by either purchasing 1/1000th of actually purchasing a tokenized real estate, or getting on the cap table of one of these, like Red Swan or Vertalo, or these companies that are actually building the technological infrastructure to make this happen. So those are two different ways.
Correct me if I'm wrong. When we're talking about Bitcoin, it's like a dollar, where they look similar, but they're different. But they could be easily changeable. So one Bitcoin looks like the next Bitcoin, not a big deal, which means it's a fungible token. And that is a less sophisticated model. ERC20 for Bitcoin, right, or fungible, but then the NFTs where we're seeing all of this new art come out and collectible items that are truly one of a kind, that is something different, like, I don't know, ERC
721.
721, thank you. It's a bigger number. I'm like, I know it's got 3 numbers, but it's a much more sophisticated.
Yeah.
So when we're talking about real estate transactions, yes, I mean, I think the first thing that comes to everybody's mind when they hear blockchain are cryptocurrencies. And the first thing that goes, okay, am I going to go buy that house with crypto? But really, blockchain then has the ERC 721 implications where, you know, it's a non-fungible token, an NFT, which means that it's more one of a kind, which would go into more your land descriptions. Because you can't just go, oh, that house is easily flipped around with that house. I can't, you know, just switch those two around.
Right.
So there are 2 main components that will affect real estate.
Mm-hmm. Yeah, so there are, you've got Bitcoin and ETH, which ETH is Ethereum. That's the cryptocurrency that operates the Ethereum network. And Ethereum has a lot of different protocols, but ERC20 is the original, that's regular ETH, and ERC21 is the non-fungible, the NFT. And Bitcoin is a separate protocol, so not really related to, you know, ERC20 versus 721. So you could use these cryptocurrencies to purchase real estate, or, and that's not really even related to tokenization, right? That's just, you're using it as a form of
a currency.
Or commodity, and depending on what the SEC or the CFTC decide, you know. If is it a Monday or a Tuesday? Is it a commodity or a security?
I've already tried, and I've literally on days where I've bought Bitcoin, screenshotted, took a picture of it because I'm reading these rules that the SEC is talking about implementing, and now the rules coming down with how we're being taxed.
Yeah.
You know, it's
a whole nother animal.
It is a whole nother animal. I'm kind of looking at it going, I don't even know. I'm like, because I buy in small bits, you know, I just buy every few weeks.
Yeah.
And it's just kind of a regular thing. So how do you?
So thankfully, Bitcoin and Ethereum are not, the SEC has come out and said they're not securities, but it's pretty unclear for a lot of the other, you know, the CFTC and the SEC are sort of fighting over regulatory space in a way. And there are unique taxes on crypto. So whenever a farmer grows his or her grain or his or her cotton or coffee or whatever the product is, they're only taxed when they bring that to market to sell it, right? In cryptocurrency, a miner is taxed as soon as they mine it, as soon as it's grown or you know, there's a block reward. And then they're also taxed on
the realization of profits.
The realization of profits. There's capital gains tax. There's a capital gains tax when you and I realize profits as well. Not only if we sell it for US dollars, but if I sell Bitcoin for ETH, I'm also taxed. If I have a
differential,
my basis, I'm selling it when my basis was here, and I'm able to make the conversion here. I have a capital gains burden on this amount. So there's a lot of, you know, not creative tax ways. I would never use the word creative referring to tax, but some unique things that you can do to lessen your burden. One is just buy and hold. And maybe on a year where you have a lot of tax write-offs, you work with your accountant and say, okay, I'm going to liquidate a very small portion. But buying and holding is the best way to avoid paying capital gains.
Right.
Same in the real estate world, right? People don't buy, people in the 1%, or so I'm told, I'm not in the 1%, but they acquire assets and they hold. And if they need liquidity, they get some sort of debt instrument, and they're able to, you know, gain liquidity without having to release the asset and incur a huge capital gains event. What you can also do is donate a portion of your crypto for a double capital or double tax savings. So not only do you get alleviated of the capital gains that you would have had to pay, you also get the income tax deduction for your donation to a 501c3.
Which is lovely. However, you didn't get to spend your crypto winnings on like a ski trip. You got to give it away.
Yeah, it does take a little bit of a philanthropic heart to it. I feel like you had a good question, and I diverted us into a tax conversation. You were talking about blockchain in
Well,
real
because
estate.
there's two separate. I mean, there
And
really
we were
are
talking about
two.
NFTs.
And then
Yes.
and then NFTs, because NFTs are, when you're looking at that, I see how those will be so real estate specific. Right now we have these crazy legal descriptions, which we've always talked about, which title companies make mistakes on all the time. And so, yeah, I could see it alleviating
That.
a lot of this.
There goes that out.
But
Yeah.
I mean, when you're just talking about using crypto to purchase real estate, are there any cons to that?
So I am not aware of any cons other than the fact that it is sort of there's a barrier to entry as far as not cost barrier, but an education barrier. You've got to find agents and brokers and banks that are willing to
Work
do
with
that.
Accept it.
So based on the regulatory framework, it's allowed. It's just people aren't comfortable yet with it. So that would be one con. There is you don't have a broker that's willing to work with you on that.
Well, and is there legislation that's coming in to play? Because it is typically, over the last decade especially, it's been used by a lot of criminals.
Yeah.
And it's not traceable if you don't want it to be, which is part of the idea. So people use it for money laundering. So will there be regulations most likely put in place where you have to pay for it with something more like your Coinbase account that is regulated and that's
There's
KYC
open, and AML.
It's kind of open
yeah.
kimono.
Yeah, great question. That's something that we always need to talk about when we're educating people about this space. KYC is know your customer, and AML is anti-money. You guys know that, but maybe for the listeners, your listeners are real estate professionals, so they probably know that.
No,
too.
some of them are new.
Some of them are new.
Yeah,
Okay.
some of them are new.
No, we
Okay.
thought we
You got the whole.
we spell it out.
Yeah.
we spell
well,
it
then
out.
I'm going to spell it out. So 10 years ago, the Wild West, money laundering, drug dealing, bad things happening on public blockchains like Bitcoin and Ethereum. However, where we are today, there's actually, and this is, the words are from the CIA director, our former CIA director in 2020 said this: there's more nefarious activity in the traditional banking system and in the US dollar, bare asset dollars, than there is in crypto in 2020.
Wow.
He said that about a year ago. Because the Department of Justice and the FBI have gotten very good at working with private sector and analytics firms to trace illicit activity on blockchain, because it's all transparent. You can see all these funds moving. You see it going to that wallet, from this wallet to that wallet, but that wallet is pseudonymous. You see that the address, but you don't see the person who
has
owns it.
Yeah.
But that person has to have an on-ramp and an off-ramp, and at that on-ramp and on-ramp, like Coinbase or Kraken or another exchange, there's KYC, know your customer, and AML. So the FBI knows exactly where those funds are. That's how they were able to recover a lot of
However,
that.
most criminals are still operating off the web, and I know a lot of people who don't store on Coinbase.
Yeah, so they have a VPN or they're doing hardware wallets. So that is much more difficult to track, but it's still possible. So the Department of Justice and the FBI have been able to secure funds in like terrorists, like if Hamas or Al Qaeda is trying to conduct activity with crypto, if there does need to be greater degrees of, we'll say like CIA-related activity in order to make that happen, but that's still something that they've been able to do to secure
because
the space.
I also had read that the what is it, the charm, for lack of a better word, of the blockchain is because you do see everything. It never goes away, kind of like, putting it on, there's no scraping it. It's there, that transaction is there. So even with the hard wallet, does that mean you still see where it went, now you don't know who has the wallet?
Mm-hmm. So you and I could send you 1 million Bitcoin. But say just somebody in Kristen. She's not able to see this transaction. She can see the money moving, but she doesn't know that I gave you 1 million Bitcoin. She knows my wallet address gave that wallet address 1 million Bitcoin.
Got it.
And that's, for privacy reasons, really important. Because if we think about the US dollar, and we think about gold, and we think about historical transfer of value, there's a lot of non-criminal reasons why someone would want to, transfer value without
Everybody.
Big Brother always looking
However,
into what they're doing.
not to play devil's advocate there, though, if you're going to steal $1 million in Bitcoin, that can go on a thumb drive in your pocket. You're going to go steal $1 million in gold. You're going to have some help carrying that down the street.
Yep, it's much more transportable over time and space, which makes
And you're
it
going to
very...
see somebody, right?
Yeah.
I mean, $1 million in cash looks a lot different.
Yep. That's why we need to be so much more, have so much more expertise to root out bad actors. That's part of what we try to do. We partner with firms that are chasing the bad actors out of the space, because the good actors in the space are being tainted by the reputation that the space has.
Exactly.
And thankfully the real estate space, because the blockchain for real estate space has not endured that level of criminal activity, because it's typically less anonymous.
Exactly.
Yeah.
Well, and to go back to earlier, because we were talking about NFTs, and I just wanted to talk about that for a second, because not everybody knows what an NFT is. Can you just explain, and now I get it, non-fungible and
token.
fungible.
Yeah.
If you'll just describe those
Don't
real
worry,
quick for
Joe.
everybody.
There's going to be a quiz at the end of this.
I am taking mental notes,
Yeah.
filing that away.
Because
All
at the
right.
very end of this, I'm going to ask you, what is blockchain? What is an NFT?
Will you
So
be
you- so
ready?
you got this
I
one?
hope so. Are you going to make me ready?
So again,
That's my goal. Yeah.
fungible
Uh-huh.
is something that is very
Exchangeable.
exchangeable, like one Bitcoin. One Bitcoin is going to look just like another Bitcoin or a US dollar.
Or a US
just
dollar.
remember of a US dollar.
Okay.
That's fungible. Non-fungible token, or NFT, is like the art that's out there, which is something, I had a couple that I wanted to ask you about, and just your opinion. I saw the auctions going for these digital masterpieces, which, what the heck are you going to do with that thing? It's not going up on your wall.
Yeah.
It's literally something that's stored in your computer. And we're talking, what was the one that,
People.
what
Yeah,
did he buy?
60 million or
60
something.
million,
Yeah.
and it was
Maybe more than
a
that.
bunch of tiny little pictures of people, right? And he just kind of put them all together, and I'm like, how is that even unique? But it is.
I have a hard time with that too.
Okay. Good. It sounds crazy.
I feel like in a way we're still talking about, when you're talking about art, then if I'm looking at this art piece, you may see value, I may see, like my kid could do it.
That's
and
exactly right.
so it's all relative.
But it
it's
is
the same
a-
concept as abstract art.
Right.
Yeah.
But it is a unique signature, which is why it's an NFT.
Uh-huh.
No one is like another one, and you can't just readily exchange them. But let's go on to another NFT, which I found absolutely staggering. So they've got all of these, I think they're like apps, right? I had one on my first iPad, and I used to call it's called Pocket Frogs. And it was like you mated these little frogs, right? You would put them together, and then they'd
mated
have,
them.
yeah, and then you mated them. And then they would make,
Very complex.
they would make all these new frogs, right? And you try to fill up your little page. In essence, they're doing that with something called, have you heard of CryptoKitties?
Oh yeah. Oh yeah.
Okay, this is
And they have
insane.
horse races too, like NFT horses that you
So
breed
you
and race.
breed, and then you race
Yeah,
these things.
I know a guy who he's like, oh, my horse, I just breeded a really great horse and made this much money. I'm like, what?
Do you know what CryptoKitties is, where you're breeding cats, which I got to be honest, cats are free. So
Yeah.
yeah, I'm like,
walk outside. I
I'm
got
like,
two
you
free
want to
cats.
breed? I'm like, and they all look the same. I mean, okay, that one's got a white foot, but they're all basically the same as a cat.
Yeah.
But apparently not. And I say this because it had over $12 million in sales for 2020. 2020.
So
Which
what exactly is going on with all that?
They breed these cats, and then they
it's-
sell them. The highest cat sold for $120,000.
I know. I would never pay that, or even $1, because I
Yeah.
don't really care about this. But there is this very small
Niche.
segment. But let me tell you what it is. It's an old economic principle going back to Austrian economics back in the day. It's just scarcity. NFTs create scarcity because there's not. When Napster came around, right? You could download millions of files. Anything on the internet is infinitely downloadable, right? But what blockchains and NFTs, and really the whole concept behind blockchain, is you can't double spin. You can't create two ownership rights to that Lenny Kravitz song, right? Like if you buy the NFT ownership rights to what's a great Lenny Kravitz song? I'm blanking on Lenny Kravitz. American Woman.
Yeah.
Then you're the only person in the world that owns that, and you can sell your royalty rights temporarily. You can tokenize it and sell, So it's really about scarcity and not about the crypto kitty. That is crazy, and that's sort of just out there.
Yep.
But the reason they have value is because there's only going to be one crypto kitty that looks exactly like whatever that one looks like. And people in this ecosystem, there's almost like this, it's sort of like luxury goods, right? We pay more for the status.
Absolutely.
Even though they're only like 1% more functional than something you buy at Walmart, but 300% more expensive. It doesn't make a lot of sense. But that's the same thing with NFTs. It's sort of like you have a digital artwork on your wall with a TV that's displaying it. Somebody could screen capture that and put it on their wall.
Right.
Just the same. But you are the only person that has the cryptographic key that demonstrates that you have ownership.
So you're the only
of
one with
that.
the original. Everybody else just has a print.
Exactly. It's like the Mona Lisa. So, if you see a Mona Lisa in somebody's house, you know that's not the real Mona Lisa. Or else they'd be in jail for stealing the Mona Lisa from the Louvre. That's the NFTs. NFTs are the same way. So it really is just an economic principle for scarcity. Granted, there's a lot of crazy implementations of NFTs out there. And I'm not really a gamer, but one of the interesting applications is in-game skins, as they call them.
Skins, yes.
Yeah, and my kids are too young to be gamers too, thankfully. So
Yeah.
hopefully,
I have a 16 and a 17-year-old.
So you know
They're
about this.
completely gamers.
yeah, they can use these NFTs to because in a game, there's this sword of whatever mountain. There can be millions of that sword. It can be instantly recreated to a million different accounts. But if there's an NFT that this is the only sword in the entire game, gamers all across the world, they're all trying to get this one sword.
One sword.
They may pay thousands of dollars for that sword,
Yeah.
which is crazy to you and me, but
Yeah, that's crazy.
I've already heard of crazy stuff like that. I try to tune all of that out.
But
when I
think
hear
about that
it.
in the business world. Think
Yeah.
about the scarcity aspect in real estate, right? You make an NFT out of a piece of land that has no, structure on it, no building. You're able to distinguish that bit, geolocation. You're able to more quickly distinguish that from all the other pieces of land out there that look the same but are different because they have different plats. And you guys know way more about this than I do. But you're able to hone in on where that is, what its value is, what the market for it is, so much more quickly than your landman going down to the county.
Yeah, and that you have to wait, a month to get them out there,
Yeah.
and the survey takes forever, and the this and the that. Yeah,
So there's some real
So the
world applications.
appraisals will go.
yeah.
Title companies, appraisers are at risk.
I'm a
Again,
little
when we-
further down the line.
When we say at risk, though, we just mean it's going to change.
It's going to
It's
change.
gonna change.
Yeah.
So there'll be 90% of appraisers will just adapt and continue. There'll
Yep.
be 10% that choose not to adapt. They'll retire. They're getting to the end of their career. They're like, I don't want to learn a new thing.
Exactly.
And they just retire.
The-
I really think that's the way to look because it's
The-
going to be a long transition.
So even though, obviously it's a more sophisticated version of the original blockchain, for anything dealing with title and real estate, I still see it, real estate, if there's a structure on it, is a depreciable asset. And you're still going to need somebody 20 years from now to go out and value it. If you've got a brand new house with a brand new kitchen, brand new bathrooms, and you don't touch that thing for 20 years, I guarantee it's not the same property. And if you don't put eyes on it and you're just looking at blockchain, it's not the same thing.
Yep. That's why those jobs aren't going away.
Yep. Interesting. Well, I mean, this has been enlightening. It's been really educational. A lot better than just scrolling on Google and looking up for what articles. Are you getting ready?
What is
to,
blockchain?
What is
The quiz is coming.
Oh, I saw him. He was getting all excited over there. He's like, let me change positions. It's J-Lee test time. So blockchain is a secure, basically, network so that you can put almost like a thumbprint, because it's original, on just about any transaction that interacts with it. I don't know.
That's a great way to say it.
Okay.
Yeah.
Whew! Oh my gosh, the pressure's off.
Now, what's scarcity in an NFT? I'm just kidding. I'm just kidding. Austrian
Is it-
economics.
Yeah.
The fun thing with that is it's how scarce you make it.
Exactly.
Yeah.
Yeah, you
How-
could print 100 NFTs. Did y'all know Kings of Leon is putting their songs on NFTs and allowing their fans to buy them?
Wow.
Oh, really?
Most people who
They're
don't
that
like
hard up for cash.
Great point. I don't know. And you have to be a Kings of Leon fan to buy that, right?
Yeah.
99% of the world is going to be like, I don't care.
Yeah.
Right. Right. Well, because they're like, well, our royalty checks have dried up.
Yep.
Yeah.
Time to make them into something.
Yep. And it's
That's
brilliant.
right.
That's the free market
It
at
is.
work.
Yeah, exactly. Well, I mean, if anybody wants to, do you have another?
No,
I
I'm
saw you
good.
put away your notes.
I put
so
away
I
my
was like,
notes. I've exhausted my notes and my questions. I had lots. So I was like, okay.
Yeah. Well, if anybody has any more questions, or y'all want, y'all have some advice, or you're already in this like space, then go ahead and drop us a comment. Let us know what you think. And if you want to get a hold of Lee, you want to tell him how to get a hold of you?
Yeah, you can get a hold of us at www. Well, I shouldn't even say that. We don't need to say www.texasblockchaincouncil.org. If you want to come to our summit in October, it's texasblockchainsummit.org as well. So.
And then you're also,
I know,
And
like,
you
what
want,
am I, from the
you want to
90s?
be our blockchain
I
guru.
know. That was.
well, you're doing
Well, I was just trying to prove to people that I'm a millennial and not a whatever the next
whatever.
generation.
Yeah, yeah.
I'm sorry, you just got pegged as a boomer.
A
on
boomer, yeah, for real.
Okay, so you're going to have the summit October 8th, but don't you have something coming up in September as well that you're speaking?
Yeah, I'll speak at the Blockchain for Real Estate Conference on September 10th in Austin, Texas.
Awesome.
The Liberty Fund is putting that on, so that's a big real estate fund.
That's very cool.
Excellent.
And if we wanted to know just about any other, can't make those two,
Yeah.
then you just go on.
So our website, you join, you can go to meetups. We've got meetups in Dallas, Houston, and Austin. Those are kind of our big, members. We have a lot of members in those three cities. So we're doing events and meetups in all those cities, happy hours, networking events, all that
So you're
stuff.
back to
Awesome.
in-person events.
We are. We do some Zoom events for people who aren't yet comfortable, but then we're back.
Back
Awesome.
networking.
Yeah.
Excellent.
All right, we're going to have to make one of those.
We will.
All right.
I will do
Well,
it.
thanks for being on and joining us
course.
today and educating us today. I really appreciate it. It was really nice to meet you.
Thanks for having me.
Yeah. And I'm J-Lee Thompson with Texel Real Estate and Real Estate Reformation.
And I'm Kristen Gerst with Capricorn Mortgage. Send me your owner finance notes to buy.
Thanks for joining us, guys.
Check the mic and make sure it sound right, boys.